one of the things that's interesting we're trying to figure out is how do you define ESG? I mean, the criteria is different, right, among different investment firms potentially.
Yeah, and I think, there's different levels of commitment.
Right.
But really what it's about is opening the aperture. So instead of simply looking at the financial metrics, the accounting metrics, looking at the environmental metrics, the social metrics, the governance metrics, and whether companies are managing those risks and opportunities well. In part, it's a sign as to whether the company in general is well managed.
Right.
But it can be,
because it goes to the top leadership, right?
Absolutely.
On these issues.
Absolutely, and it can give you real insight as an investor as to what risks may be down the road. I think we've been quite prescient on some risks, like those facing Facebook, going back to December of 2016.
Right.
So it's really about that wide view. The other piece that it's about is it's not just what aren't you investing in, because I think for a lot of investors that don't want to be in things like tobacco, nuclear weapons, or big oil companies.
Kind of very obvious, right? To some extent.
Very obvious. But then there's what kinds of companies do you want to invest in? And right now, impact investors are looking at the Sustainable Development Goals and trying to align their investments with those goals and what companies are commercializing solutions to our greatest sustainability challenges.
And doing that type of investing, Natasha, I think at one point it was thought that you had to kind of trade off returns. You don't anymore.
No, this is not a concessionary approach to investing and return. It's really actually about identifying these risks and opportunities so that you have a long-term tailwind to performance.
So tell us about some of the specific companies, because Facebook, you have certainly been out there front and center in terms of some of your concerns about this company. And one of the things is that you think that Mark Zuckerberg has too much of the power of the company, right?
That's right. So we've been engaging with Facebook for 3 years, since December of 2016, and asking them to address things like election interference, content governance, really the woes that we're seeing on the platform, privacy concerns. And with Mark Zuckerberg in this role as chairman of the board, CEO, and the company's most powerful shareholder, he just has too much control. And it's really important that to recognize that Zuckerberg alone cannot fix Facebook. There needs to be a diversity of views that's present.
Well, it's interesting. I mean, do you see any signs? I mean, they certainly have been out there looking to make some changes in terms of some of the information on their sites and privacy concerns. Do you feel like they're starting to take steps in the right direction?
I think they are. I mean, those are the steps we've been pressing for all of this time, and you're starting to see it. The question is whether that extra transparency, and I don't think it's full transparency, is actually addressing the underlying issues. And with a platform at such a scale with 2.4 billion users, I don't think they can manage it.
Where do you think regulators should be in on all of this? And I think about the structure where you do have either a co-founder or a head of a company able to really consolidate so much power, certainly voting power, when it comes to a public company. Where should the SEC be? Where should the regulators be on this kind of structure? Because sometimes it works. Sometimes it doesn't.
Yeah, and I mean, honestly, I fault the investors for letting it happen in the first place, in terms of, when the company does go public and accepting those terms, because it's simply, it's simply good governance 101. This doesn't work, and we see the outcomes, particularly in the case of Facebook.
Talk to us about some of the other companies. I think about proxy season coming up, and there's a lot of folks that'll put out some issues when it comes to companies. ExxonMobil was one we started talking about before we got going. What would you like to see in terms of ExxonMobil doing differently?
Sure. So, one of the things that we focus on is fossil fuel-free investing, and we have fossil fuel-free investments across asset classes, but we do have shareholders, investors that hold stock in Exxon and have held it for a long time and are very concerned about the direction of ExxonMobil. We have a proposal going to a vote at the end of the month asking the company to actually form a board-level committee on climate change, because we think that the steps that they're taking are not enough, that the company is facing an existential crisis to its business in climate change, and they're really not pivoting in the way that they should. And so we think, again, kind of going to that governance level, where does the fiduciary duty fall? How is the company going to change? And we think it needs to go to the board.
Do you feel like the C-suite is getting more sensitive to these demands in terms of ESG factors?
I do. I was on, actually, Intel had their virtual annual meeting, which I'm not a fan of. I think you have an annual meeting at a place and investors are invited, and then you can have it virtually as well. But alone, I don't think it's a great format. But most of the Q&A portion of the meeting was about sustainability issues, ESG issues, concerns about diversity. We had a proposal going to a vote asking for the company to publish its median gender pay gap as one of the structural barriers that women aren't holding enough high-paying jobs at the company. And in that, they're not in positions of leadership. And we know that diversity, gender and racial diversity actually improve performance. So that's what we're looking for.
And do you find, just quickly, about 30 seconds here, do you feel like the performances are coming along as a result of this?
I think companies are managing these risks better than they ever have. We certainly have laggards like Facebook and Exxon, but it's catching on.